Hi, everyone. Welcome to the Real Vision Daily Briefing. If you've joined us for the Festival of Learning, you know that Raoul and I are busy wrapping up with a live Ask Me Anything over on the website. I can neither confirm or deny whether any Spanish cava is involved. If you weren't able to make it, though, don't worry. We are going to do something special here as well. We're going to unlock a couple of conversations that were most popular among our members over the last few weeks. The first revolves around the role of hard assets in this period of stress.
Want to save 10 minutes for the discussion on gold versus Bitcoin. As I said earlier, it is a bit of a hot potato, this topic. And to use your wording, Ronnie, I think the Bitcoin case is an extremely dividing case in many ways. Also, even compared to the gold case, everyone's got an opinion on Bitcoin as well. And either it's basically the cure for everything, or else it's not worth anything. So, Frank, I'll start with you. Digital gold, Bitcoin versus the actual physical gold. What's your opinion on this?
I have very strong opinions.
Mm,
So I did a debate a couple of years ago with Michael Saylor, who is the biggest Bitcoin proponent
mm,
out there. And I did it for a reason because he was out there talking up Bitcoin, which is fine, do whatever you like. But he was suggesting that gold was going to go to zero and Bitcoin was going to take over the entire gold market and go to $1 million per coin. Okay. And that really, I had to shake my head. And I challenged him to a debate. He finally agreed. And you can find that on YouTube somewhere. There's over 2 million views on that. And I went through all the reasons why Bitcoin is not gold. Okay. Now, obviously, there are two similarities. The similarities are scarcity. Okay. Gold is scarce. Bitcoin is scarce. Arguably more scarce than gold because gold has an inflation rate around 1.5–2% a year. But here's the thing. And listen, I've always said this. I may be wrong, but if you want my honest opinion
mm.
as whether Bitcoin is the same as gold as a store of value, I say absolutely not. And I'll give you all my reasons because it's untested in a crisis yet. It's barely a decade and a bit old. Okay. It's never been tested during a crisis. It does not behave and has not behaved like gold. They actually behave differently at different times, which is proof that it's not gold. It's something. I don't know what it is, but it doesn't, it behaves contrary to gold. For a long time, it was a momentum play played by all the big players. And I have to give credit to the Bitcoin maxis. They did an incredible job of marketing the concept of Bitcoin, an incredible job, including buying off members of Congress with inflated Bitcoin prices. You got to give them credit. They did it. Okay. Um, but it's not gold. Okay. Gold's been around for 5,000 years. An ounce of gold today will buy you a fine uh, gentleman's suit, like a Cuccinelli suit. It'll buy 1 ounce. Will buy 150 years ago. It bought you a nice gentleman's suit. 2,000 years ago, it bought you a fine Roman tunic. Okay, it keeps its value. Period. So, what do I fear? What is my fear about Bitcoin? Is that in a crisis, and I am one of those that believe that eventually we will have a dollar crisis, a fiat currency crisis, because you can't do what they're doing forever. Eventually, gravity will take over, and you're going to have a loss of confidence. You're going to have a crisis. Um, if Bitcoin is any type of threat to the US dollar system or perceived to be a threat, they will keelhaul it. And it's easy to do. All you have to do is outlaw the ownership of Bitcoin or control the amount that you own. And you can shut off the on and off ramps quite easily. It's a digital asset that you can shut it off with a switch of a button if you wanted to. And so if that were to happen in a really extreme scenario, what are you going to do with all that code sitting in your wallet? What good is it going to do? Now, listen, gold, they've tried to confiscate your gold in the past. The US tried to do it in 1933. First, they said, turn in all your gold. And then momentarily after that, they they repriced gold or devalued the dollar. So they basically screwed over the American people. And in 1971, after all the promises, Nixon closed the gold window and said, no, we're no longer go back. You can't have our gold. So gold was like smoke. You thought it was there, you went to grab it and it was gone. Okay, so they may try and confiscate your gold, but they will never try and kill it because they own it. Central banks own a lot of gold and they keep buying it, including the US has a lot of gold. It's not selling it. Okay, so they may try and get your gold, and good luck to them if they try, but they will never try and kill it. Now, Bitcoin, they don't own Bitcoin. Bitcoin is just a competitor, a potential competitor in a time of crisis. And you know what happens in times of crisis? You have capital controls. Also, governments will go to great lengths in a crisis to, including screwing over their own people to keep the system intact. So that's it. To me, that's it. Now, listen, I may be proven wrong. And if I live 50 years longer here, and 50 years you ask me and I'm wrong, great. But if you're asking me today, where am I going to keep my store of value where I can sleep at night? It's going to be gold. Bitcoin has its purpose and people can speculate whether it will be a gold-like asset someday, and that's fine. And they may be right, but it's certainly not proven today, and I wouldn't take the risk as a store of value. End of speech.
Ronnie, before I allow you to respond to that, I'd like to challenge you a little bit, Frank, with a follow-up question. Let's assume that something material happens to the view on Bitcoin within central banks. Let's assume that there's a growing probability that central banks will actually accept Bitcoin as part of their reserve, or accept the possibility that Bitcoin could become part of some sort of digitally backed currency. What would that be a game changer for your view? That's basically my question.
Well, of course, but you're speculating. If my aunt had a beard, she'd be my uncle. It's like you're speculating. If, and that's what guys like Michael Saylor are running around and saying, well, look, El Salvador and Central African Republic, I said, so what? By the way, it's been an absolute disaster in El Salvador as the whole Bitcoin experiment. Sure, if tomorrow, China, the Central Bank of China, or any other large country decided to load up on Bitcoin, of course it would change my view, but it's not happening. I don't see it happening. And so until it happens, you can't ask me questions like that because it's speculation.
Yep. Fair point, Frank. Ronnie, I'll allow you to conclude on this topic. I suppose that you have a lot of discussions on this exact topic of Bitcoin versus gold with institutions and clients of yours.
Yeah, well, Andreas, I mean, I bought my first Bitcoins in 2012, and in hindsight, I sold too early. That's at least what my wife keeps telling me. But I think it's. What I really like about it is that people are discussing money again, and I see, if first of all, if you go to Bitcoin conferences, it's crazy. Yeah, you meet so many, people from all over the globe with a very, very positive attitude, and it's a very, very positive sentiment, and that's what I kind of enjoy, especially compared to gold and mining conferences where it's sometimes a bit depressing. But the fact that young kids are now questioning themselves and asking the question, what is money? Where does money come from? What is good money? I think that's a very, very positive thing, because it's not, money is not being taught in school, on universities, and I would say like 99% of all people working in the bank have got no clue how money is actually being created. So that's a positive thing. The second thing is, we run two funds that actually combine gold and Bitcoin. One of them is 75% physical gold stored in Liechtenstein, and 25% Bitcoin in a cold wallet, and then we use the volatility of the Bitcoin market by writing options, which is, from my point of view, that totally makes sense. But we faced lots of criticism from the gold community saying, Bitcoin is our arch enemy, but then also from the crypto community, because they said, well, gold is, that's only for old people, and it's the past but not the future. From my point of view, it's a good combination. And of course, I mean, gold has this tremendous 5,000 years track record, while Bitcoin is hardly a teenager. I mean, it's around for 15 years, and we all know from our teenage times that we do crazy things during that time. But we grow up, and I think that Bitcoin has also grown up, and we are seeing, for example, when it comes to volatility, the 360-day volatility of Bitcoin was 38%, which is the lowest volatility on record. Gold's volatility, by the way, is roughly 13%. So it is definitely, it's a volatile beast, but it is also something that I think tries to, copy gold. And I think Satoshi Nakamoto, whoever it was, he clearly understood gold. And for example, in the white paper, it says, the steady addition of a constant amount of new coins is analogous to gold miners expanding resources to add gold to circulation. In our case, it is CPU time and electricity that is expanded. So the stock to flow ratio is really crucial when it comes to understanding gold and when it comes to understanding Bitcoin. And I think, this relative scarcity of gold and Bitcoin, this this low inflation rate, this is really something that you want to have in this world that we're living in this monetary system. So I would say, buying Bitcoin, but also buying gold, it's like a very active decision to leave the fiat money system. And I've got it for many people that have never bought gold, but also Bitcoin before. For them, it's like they feel like it's something, it's like having sex for the very first time. They try to read everything and inform themselves, and they're really nervous. But it is, I think, once you got it, once you understand how our monetary system works, I think gold, for stability, but probably Bitcoin for convexity, makes sense. But I know that it's a very, very emotional topic. But let's face it, we're free market guys, and I think we all enjoy the virtues of competition. And why shouldn't we have like currency competition? I think that's what Hayek basically said. So I really welcome the fact that Bitcoin is here, and I would say that I once made the comparison in an interview with Daniela Camboni. I said it's like gold is like having this super stable Volvo SUV in your garage, while Bitcoin is like a motorcycle, a Ducati Panigale, and you can have both actually. Yeah, why not? When it's probably a bit icy, when it's raining, when it's foggy, you want to sit in the Volvo SUV, but it's probably more fun to ride the Ducati. So I'm in the camp that says, well, why not have both?
Ronnie, to be brutally honest, I think losing my Bitcoin virginity was a better experience than losing my actual virginity. But I guess that says a lot about the latter, right? Guys, it's been a tremendous pleasure hosting you for this discussion on gold markets and also the discussion on gold versus Bitcoin. Ronnie Stoeferle of Incrementum Asset Management, thank you very much for being with us. And also Frank Giustra, the president of the Fiore Group. Thank you very much for being with us on our platform. It was a pleasure hosting you.
Ronnie raises an interesting point about the parallels between Bitcoin and gold. Are digital currencies finally beginning to move into the role of alternative assets? In this next segment, Raoul and Kevin Kelly break down the very latest happenings at the cross-section of macro and crypto.
What I'm trying to express to people is we kind of just watch just the price and we see that, and it's like, that's what we think is going on. But when you actually spend some time, like Kevin and I were at a party, there's a whole group of people doing music. There's a whole group of people doing seeding kind of the consumer applications side and building that. There's VCs helping all of these new businesses in their journey. Then there was people like Colleen Sullivan, who's been on Real Vision, talking about gaming and culture. There was Brian Armstrong talking about regulation. There's the people working on payments rails. There's the people working on zero knowledge. There's people working on every single part of this. The guys from Franklin Templeton who've been on Real Vision were talking about tokenizing real world assets. So what you're seeing is the financial system building, the gaming industry building, the culturally relevant stuff around music and fashion and NFTs and all of that building. We're seeing the payments rails, the wallet, the application level. I mean, there is so much going on, and you don't really realize it because you just watch price and watch Twitter. But really, it is so deep and so disruptive, and everyone's kind of taken their niche and is going after that part of the ecosystem to disrupt. And the space, I get reminded every time I go to an event, is it is easily the smartest group of most eclectic thinkers of any industry I've ever been in. And when I was at Goldman, finance was taking more nuclear scientists and more scientists overall than all of academia and pretty much everywhere else. We had a lot of smart people, but they were kind of singular types that fitted in. This is like, Christ, everybody's a weirdo, and they're all incredibly smart. So that was my takeaway. Kevin, what do you think? What did you see?
Yeah, I think to that point, sometimes I think I shouldn't say the people in our industry are often almost too smart for our own good, right? Where, as we've talked about, I think getting back to the basics and simplicity will rule complexity every day of the week, right? Especially when you're talking about more consumer-facing applications. No, I had very similar sentiments. I think the focus on the application layer, as well as all the classic infrastructure conversations that happened, was certainly refreshing. There was 2 or 3 really well put together events, specifically targeting real world assets, like you just talked about, which I thought was a bit surprising. And it seems like, again, that's an area where there's a lot of both time and resource and investment going into, even though that's very, very kind of nascent, at least where we are today. So there's plenty of things that, again, for anybody who's an enthusiast or just curious about the space can kind of branch into. And that's also what I love about it. To your point, a lot more of the events I was around was kind of that consumer facing application, cultural type of Web3 use cases. But there's really something for everybody in this space, right? Whether you're a developer and you're really focused on the infrastructure side, whether you're now, again, have experience in product development and specifically consumer product development and what the important kind of metrics are, how you even acquire users for a new application, and all of those kind of trade secrets are only becoming more important, right? As those types of applications start to get built out, the whole TradFi real world finance aspect. So there's the merging or meeting of the minds across a number of different sectors, number of different ideas, number of different industries that are all kind of coming together within Web3. It's certainly going to take time, right? It's not an overnight thing, but events like that, I totally agree. It's a nice refresher and rejuvenator of sorts, right? Around what it is, why we're still here and why we're excited about those.
And the other 2 that stood out to me is I had a chat with Tolly from Solana. Him as a thought leader, he's impeccable. He never attacks anybody. He's very inclusive. What they're building is mind-blowing. It's the first time I've really heard about, is it called Fire Dancer?
Yeah.
400,000 TPS. I presume it's a Solana layer 2, is it?
It's a Solana client. But yes, it's the purpose is to try and increase scalability. And it's one of those things where at scale, or once we reach, more quote unquote mass adoption, those types of developments will be really important. But I still do think, not to rain on our parade here, I still do think we have a lot of excess capacity in terms of block space and just a lot of the technology that's been built to improve scalability and all that. We really need to have more of those use cases that bring more people in for us to really test the limitations.
But it's also a catch-22, right? Because unless it's
you need it before
enough, you can't do ticketing. Well, you can do now on Solana because they've made it so cheap, but a lot of the use cases you can't do. You either can't do big enough files like video, or you can't do cheap enough to do tickets. It's like it's part of the infrastructure needs to happen. But you're right. I mean, there's an excess of blockchain capacity, which is why I think all of us think that the consolidation ends up in 5 or so major chains, I guess.
Yeah, I will say really quickly another conversation you and I both had at the event we attended. If you're looking for a real kind of example or examples of this kind of consumer-facing product app development that we're talking about, I would check out everything that Chess Loss and the Seed Club team is doing. They've got their demo day in a couple of days.
Yeah, I couldn't make it, but that looks a great day, actually.
Yeah, and they basically
Kevin, tell us, for people who aren't familiar, tell us a little bit about it.
Yeah, so Seed Club basically started off as I guess a bit of a dour collection of people who wanted to focus on creating an accelerator model for more kind of unique, novel consumer-facing products within the Web3 space. And they eventually, certain members of their team also wound up spinning up a venture side that allows them to kind of invest in some of these projects. But the point being is they now have, I think, hundreds and hundreds of applicants for 15 to 20 slots for each of these cohorts that they do, accelerator cohorts that they do. And they basically take them through a classic accelerator program where all the way from the kind of ideation to trying to build an MVP to then demoing what that MVP looks like, how it can be used. And the range of these types of products go anywhere from, again, music applications to, ticketing to whatever. The demo days I've found really, really valuable, not just to see what people are building out there, but also to kind of expand the imagination of what is possible with this tech. And what's really interesting, you have a lot of people and founders who are building something from an industry that they come from, and they're trying to find better ways to leverage Web3 and crypto and this technology to create an actual better product than what the incumbents can offer, right? Either a new product or something that is a significant improvement upon what exists today. And so, again, all of us have our own kind of expertise in different worlds that we come from. And so what I love about that is people talking from a point of being a domain expert about, my, let's call it music industry expertise and experience. And now I'm going to go build an application that's, targeting this industry. And here's the problems we're trying to solve. And here's how we're doing it with Web3. It's just a really, really interesting and quite frankly, a fun, team to follow, because I think a lot of what they're doing is kind of at the center of some of the trends that we've been talking about here.
And you've interviewed Jess in the past, but I think it would be a great idea to bring him back to
because they've done a ton since I first brought him on.
He's one of the nicest people in the business, and also he sees a lot of interesting things. So you should definitely get him back. The other thing that was interesting around the consumer stuff is Tarek. So Kevin and I were co-founders of a business called Science Magic Studios. And Tarek's the president. He ran Web3 at Adidas. Many of you have seen him on the platform. We had a great Twitter Spaces with Lacoste, some karate combat group, and also the guy who built, Adam Brotman, who built Starbucks' loyalty program. Just really interesting to see how the big brands are thinking about this. And they were thinking about it in the same way that you were just saying. They're using Web3 not as we want to do a Web3 thing. They're saying, how do we get closer to our community? What are the business problems we're trying to solve? And how do we use this technology? Does this apply to this? And it's been really, really good for them. So they're all still crazy excited about that kind of stuff. And I think we'll see more of that over time. The other people I bumped into was the team at Coinbase, the head of institution, Brett Tedge-Paul, who's been on Real Vision, great guy, and also the head of Coinbase Asset Management, because that's a new thing that they've done as well. They bought One River, they're integrating that. And every time I meet people from Coinbase, I'm more impressed. What they're doing is building they're going to build a monopoly in the end. And the US government's kind of going to enable it. And maybe the Europeans are too. So Coinbase is just fascinating. The quality of what they're building, who they're building. Kevin, you know more about it. I don't really understand Base.
Yeah, so Base is basically a you can think about it as an L2, Ethereum L2 that Coinbase built, basically using a fork of the optimism tech steps, uses like optimistic rollups, right? What I find really interesting about Base is that, and I think you and I have talked about this a little bit, and we had an actually really good discussion internally this past week on this broader kind of meta concept. I think when it comes to these L1s, L2s, these base layers, these protocols, right, where this activity is taking place, I think we're going to start to see, yes, there are still things that need to be built out and improved upon on the technology side. But when it comes to things like rollups, some of that technology might wind up becoming more and more commoditized, right? So what you can do with it doesn't really change a whole lot. But what becomes even more important now is distribution, right? And so distribution over tech may wind up being, the kind of winning solution, or what matters more, right, long term or in the end game. And what excites me about Base is, one, is backed by Coinbase. I think Coinbase is an extremely impressive team. They've almost kind of gone full circle, and they've become cool again in a sense, right? They've played into a lot of the relevant crypto narratives and the ethos of this space more recently. And some of the applications that are being built on there are actually starting to gain quite a bit of traction, right? Friend Tech is one that has exploded onto the scene in the last several weeks. And when you look at some of the on-chain data and metrics, I mean, Base has already surpassed what Optimism and Arbitrum, some of these other kind of what you would consider L2 competitors or peer chains. It's already surpassed them in terms of total transaction count, activity levels. And so the fact that it's going to be integrated into this bigger coin ecosystem that Coinbase is building, I really think Coinbase is going to wind up being the gateway for a lot of people within Web3. And I think that they're going to be able to sustain some of the revenue or business lines that they currently have, especially around retail trading, because as we've talked about, convenience in this space is also going to be, I think, a big factor going forward, right? So if you might be paying above average fees to trade on Coinbase's platform or its exchange, but if you're not really leaving their ecosystem, right, because you're interacting with applications that are built on Base, you have the ability to kind of trade in and out of assets right there in one interface that you don't have to leave. I think they're actually going to have a bit more staying power, or the ability to charge above average fees across the board than most people think. And when I say most people, I think Wall Street analysts, because
also
we did quite a bit of work.
Security of storage. I mean, Coinbase. If you're going to store it on an exchange, Coinbase would be my chosen one. Yeah.
So everything they're doing there, I think, in terms of distribution, it's hard to see, a more a better team or a better L2 right now that has that type of distribution potential than Coinbase, because they can build off of everything they've already built.
Raoul and Kevin have that conversation monthly. We've heard from a lot of you that you want to better understand this space, so we are going to be dropping a new crypto section for the Academy. All of this is available on the new Real Vision platform. Just go to realvision.com to learn how to join the best financial community out there. Have a great weekend, everyone.